Have you started trading but aren't sure whether to do day trade, swing trade, or position trading? Don't worry. Each strategy fits a specific profile, and understanding this can completely change your results. I'm Chad Vermillion, part of the Zero Markets team, and today we'll talk about 3 most commonly used strategies in the market: day trade, swing trade, and position trading. You'll learn how each one works, the pros and cons of each approach, and most importantly, which fits best with your profile, available time, and risk tolerance. If this content makes sense to you, hit like, subscribe to Zero Markets channel, and activate the notification bell, because this kind of content can help you save time, energy, and money in the market. So, what is each strategy? Number 1, day trade. Trades start and end within the same day. You buy and sell the asset during the same trading session, targeting short price moves. Think of a delivery driver making multiple quick trips throughout the day. The goal is to capture every small opportunity. Typically uses 1, 5, or 15-minute charts. Speed is high and focus is technical. Number 2, swing trade. Hold assets for a few days or weeks, waiting on a trend to consolidate. Like a merchant who buys products today, stores them, and waits for the right moment, then resells. Uses daily or 4-hour charts and requires patience, but still demands regular monitoring. Number 3, position trade. Focuses on long-term holdings lasting months or even years. Like someone planting a tree, watering, caring, and harvesting much later. More aligned with fundamental analysis, macroeconomic behavior, and strategic vision. Now let's look at the pros and cons of each trading style. Day trading. Pros: quick potential returns, plenty of intraday opportunities, focused on technical analysis and short-term setups. Cons: high stress and emotional pressure. It's time-consuming and demanding, mentally exhausting, especially for beginners. Swing trading. Pros: most time for analysis and planning, lower emotional pressure than day trading, can be combined with other jobs or activities. Cons: exposure to overnight risk, requires patience to let trades develop. Position trading. Pros: long-term vision and success, less screen time and daily monitoring, avoid short-term market noise. Cons: requires more capital, demands strong conviction to hold through volatility. So, how to choose the right strategy for you. Time available. Can you follow the market all day or only in the evening? Emotional profile. Can you tolerate seeing your position negative for days, or do you prefer immediate results? Financial goal. Are you looking to build wealth over years or seeking short-term income? There's no right or wrong. There's what works for you. Practical example. Someone who works 8 hours a day will likely struggle to day trade consistently. Swing trading may be more realistic. Those seeking total freedom and thinking in 10-year horizons may focus on positions trading and regular contributions. Final tip: combine styles consciously. You don't have to choose just one. You can have a long-term portfolio while testing swing trades with a smaller portion of capital. The key is to be honest with yourself. Know what you're doing, your objectives, and your risk appetite. Day trade, swing, or position. The best style is the one that fits your life, time, and mindset. Whichever you choose, study, record your trades, and have a clear plan. If this video helped you better understand which strategy fits you, please like below, subscribe to Zero Markets channel, and activate the notification bell, and comment below. Which of these strategies do you currently use? Or which do you want to try? Let's chat.